Hello, Tim Storm here with Arbor Financial. Hope you had a great week. So today, St. Patrick's Day, I'm wearing my Malarkey's t-shirt from last year. So this is actually a big day for my team. We actually go out. Today we're actually going to be hitting Dirty Nellies, then we're going to the Harp, then we're going to Malarkey's, then Shamrock, and then ending up at Muldoon's in Newport Beach. If you're going to be somewhere along that route, let me know. I'll buy you a beer, who knows. Interest rates had a great week this week, so it dropped about 0.5%, at least as of the recording of this video. Now, the Silicon Valley Bank closure last week on Friday definitely created a lot of uncertainty in the market, but uncertainty in the market can help mortgage rates. We had what we call a flight to safety. And there's a flight to safety meaning that investors pull their money out of the stock market and buy bonds because they know what their yield's going to be. And that is what happened this time, and we got an improvement in rates. We also had the CPI come out on Tuesday, and then on Wednesday the PPI. Both of those pointed to lower inflation numbers, which has been going on for the last 5 or 6 months, and hopefully will continue on. Now, the economists that I follow believe that in April, the year-over-year numbers could be a little rough, so we could see interest rates go up a little bit as we get into the beginning of April. But then when you get to May 10th, that CPI reading is going to be very favorable when you look at the year-over-year number that we're going to replace. So we could see or should see interest rates improve really for the rest of the year. That's the goal. That's what I'm hearing from my economists, and that's what I'm going with. Now, the program that I want to talk about today is a 100% financing FHA program that includes a down payment assistance. Now, this is not CalHFA. This is actually a different program than CalHFA. The differences, the advantages on this program, there is no income limitation. So CalHFA, you've got to be within a certain income limitation. This program, you do not. You don't even have to be a first-time buyer, and it goes to the conforming loan limits. You can go down to a 600 FICO score, and CalHFA cuts you off at a 640 FICO score. CalHFA also cuts you off at a 50% debt to income ratio, whereas with this program, we can follow DU. So if we get a DU with a 57% back-end ratio, which is typical for FHA, then we can do it with this down payment assistance. Now, the down payment assistance is 3.5% of the purchase price. Since that equals the down payment that's needed on an FHA loan, then that's why this really pairs well with FHA. Now, there's still going to be closing costs that the buyer's going to be responsible for. So either they can put their money towards the closing costs, or you can get a seller to pay closing costs if that's possible. Just depends on where they're looking, and they could get in with nothing out of pocket, low FICO score, co-borrower, the whole thing. So interesting program. If you want to learn more, let me know. And if you want to see a purchase analysis based on this scenario, you have a buyer that wants to talk to me and learn more about it, then let me know. I'd be happy to put something together for you. So that is it. So I will see you next week, unless I catch you somewhere along the St. Patrick's Day route today, and I will talk to you later.